expected move below gamma neutral and below the collar. This is closing below GN, generally not bullish, especially with no significant data in the morning. Obviously AVGO earnings and Costco earnings tonight could have some bearing on the overnight futures, but we'll have to see how that plays out. In the meantime, gamma negative and a pretty decent chunk of delta falling off the chain, and that's going to continue to fall off, as price moves down, right? The delta on those contracts will diminish, and the market maker will hold less and less of a hedge. Failed to the 60-90 level on ES, tested it a couple times today. Ultimately went back down to test the 60-65 level, which also failed. That opens up a test around 60-50 or 60-35. 60-50 is kind of a minor support. It doesn't have a lot of, none of these supports have a lot of historical information, but I wouldn't say that it's a very solid support just yet. Even here, when it was first tested, it slipped closer to like that 35 level. A slip of the 35 level is definitely significant and would round out what we have as a top here. We failed to lose it on the last drop a couple days ago, so we'll see if we lose it this time around. But that's the next level that we'd be looking for. Cross back to 60, above 65 to the upside. Not necessarily bullish, but may just imply that there's going to be more consolidation before we get a move up or a move down. But I would say that the 60-65 points fairly neutral here. Dollar up across most of the day, which should be expected with the heightened inflation from this morning, and yields up, especially at the back end of the curve, moving up quite swiftly. The 20-year at 4.6, 30-year at 4.55. Notably, the 3-month yield just a hair above the 10-year, 0.003. So not much of a spread there. And as that spread breaks down, these nearer dated treasuries become less and less desirable, and the longer dated treasuries become more desirable. This is the bear steepener that Dork likes to go on so much about. Broad commodities fell today. Big losses in gold and the rest of the precious metals. Copper dropping a bit. Oil down from yesterday, but still holding above $70 a barrel. Not too much interesting shit with commodities or materials. No. Correlation on the 1 and the 3-month moving up today. A little bit of breakdown in dispersion, which is not surprising after yesterday's push kind of faltered a bit. There's still a bit of a spread there between those two, and we would definitely want to see the 1-month correlation move above 3-month correlation before we saw any steeper downside moves, but something to keep an eye on. Leverage in the carry trade up alongside the dollar and the rising yields. However, this leverage isn't doing much to push risk assets higher. Leverage on the short end of the carry not moving much at all. There's definitely still some fears surrounding the Bank of Japan decision next week. They could raise rates, even though they're unlikely to. There's always the chance that they could, depending on economic data between now and then. Forward yield on volatility is still extremely low, but starting to turn around a little bit from yesterday's lows. I think yesterday we closed out around like negative 16%. Today, moving up a little, negative 14.94. That can snap back really, really fast. So, I would probably ignore how negative it is and focus more on the fact that it's moving back up again. Bond vol, shockingly, not picking up very much, although today's moves might help it tick up a little higher. Skew bounced back today, but that didn't really seem to have much of a change in the market. Not a lot of tail risk hedging still, not a lot of bot puts to the downside, so losses to the downside are still going to be incremental and kind of slow. 36.77% of the S&P 500 above its 20-day moving average, so a little bit better breadth than we saw yesterday. But the market's still largely oversold here, which is interesting given that Tech has been able to hold up almost 70% of the index. Now, improvements in that don't necessarily mean that the market will go up if those improvements come with tech moving down. So something to consider. The correlation between VIX, cash VIX, continues to move up today. Now increasing 3%, almost 4% day over day. So we're starting to see that accelerate a little bit. Part of that is, we're going into the VX expiration. The other part of that is that, we're starting to get more volatility. And we're starting to get heightened volatility expectations more than 30 days out as well. Fed fund futures pricing in 0.29 rate cuts now, almost the local low, and the lowest it's been in quite some time. So only 0.3, 0.29, 0.3 cuts expected by June of 2025, which would mean that the 97% expectation for a cut in the December meeting would be the last cut we see for the next 6 months. Or at least that's what they're presuming, right? That's what they're pricing in. The 10 2-year spread, very positive, despite the 10-3 still not moving into positive territory. This moved up to positive 13.3% on the 10 and the 2. So 10 advancing quite a bit on the 2 in yield. Yeah, this is bear steepener, right? And we're seeing a bit more of that. Overall today, not very good performance anywhere. Apple had an okay day, but not really amazing or anything, just chopping. Nvidia, AVGO down. Google pulling back a little bit after breaking through Gamma Max yesterday. Tesla finally seeing a little bit of downside. And then broadly, everything down. There's a little bit of moves in consumer services and consumer non-durables, but everything else kind of sucks. I guess tech services didn't get hit that hard across the board, but Google and Oracle and Adobe got smashed with their lowered guidance yesterday. On the technical side, that does put us at a failure of the 29 trend that we were so hyped about in the early part of this week. That is now behind us once again, to the upside, and we would be looking at 60.31 to confirm a breakdown. So we still need to lose that level to the downside to kind of confirm a signal here. If we do get that by the end of the week, that'll be a lower high, lower low throughout the December 9th week, which, would imply that we get a continuation the following week. So probably keep an eye out for that. That's about it. Yeah. All right. Thank you guys so much for tuning in. I will see you all bright and early tomorrow. Later.